Hi folks, welcome back to our Forex training, episode 9. Today we are going to look at technical indicators and more so moving average and the relative strength index. Remember in our previous lesson, we began by looking at the various types of moving averages, the various types of technical indicators. We saw that we have moving averages, we have relative strength index or RSI, we also have stochastic, we have what we call moving average convergence divergence, that is the MACD. We have the Bollinger Bands, and we also have the parabolic stop and reverse. So in today's lessons, we are going basically to measure on moving average and relative strength index. Therefore, the objectives of today's lesson is that at the end of this lesson, you'll be able to understand the various common types of technical indicators. Also, you'll be able to understand what moving averages are. You'll be able to know how to use moving averages to determine your entries and exits. And you will also be able to understand the relative strength index, that is the RSI, and know how to use RSI to determine your entries and exits. So when you talk about moving average, you need to know that moving averages help smooth out price fluctuations and identify actual trends. Therefore, moving average is an indicator that shows the trend, okay? Moving average will help you understand market direction. You need to understand there are various types of moving averages, such as a smooth moving average or SMA, and this is basically one of the best, because it helps to smooth out the price. You can use moving averages to identify entries and exits. I'll be able to show you that practically as we continue in this lesson. So this is a chart showing moving averages. You can see this is a 50, the yellow line is a 50 moving averages, that is smooth moving average 50. We also have the red one, that is 100 close. We also have the purple one, which is the 200 close moving average, okay? So I'll be able to show you how to set these moving averages in your MetaTrader. Then we have relative strength index, that is the RSI, and RSI helps in evaluating the strength of the market. So it basically ranges from 0 to 100. And how to interpret this? Any reading between 0 to 30 indicates an oversold or an undervalued market. And this signals a trend, change, or reversal. Okay? So therefore, you look to buy. This means that the market was in a downtrend, and now that it is oversold, now we are looking to buy. The market might reverse in the upside direction. Then when RSI reading is between 70 and 100, this indicates overbought or overvalued market. And this is a signal that a trend change or reversal is likely. So you look to sell in this type of scenario. And therefore, when I say you look to sell or you look to buy, it doesn't mean immediately the market comes. For instance, let's say the RSI is reading between 70 and 100. So the moment it touches 70, it doesn't mean that you need to sell immediately, okay? So you have to look and wait for confirmations for you to ensure that you are taking a high probability trade. Waiting for confirmations, you can use maybe the idea of support and resistance that we have covered. You can use candlesticks patterns to be sure that you are taking a high probability trade. And one thing, when you are using indicators to trade, ensure that you don't use one indicator only. Use a couple of indicators, 2 or 3 indicators, and both of them should be confirming for you that the entry is a high probability entry. So this is a relative strength index, as you can see in the chart, and it shows areas of overbought and oversold. So you can see this is 0 to 30. So you can see anytime the market is here, it bought. For instance, it was at this point, it bought. At this point, it bought all the way up. And the moment it reached the areas of oversold or overbought, it started selling. So you can see the RSI at this point, and the market is dropping. Okay, and therefore I said you cannot just rely on one indicator only. You need to use at least 2 or 3 and other confirmations like support and resistance, and also maybe candlesticks patterns, so that you ensure that you have a high probability trade. Therefore, I will now take you to the MetaTrader, whereby I will show you how to have these indicators on your screen. This is my demo account. This is the MetaTrader. And when you are in the MetaTrader, how to install these indicators? First, you shall begin with moving average. So you come at this point where you see my cursor. When you click that point, you'll see several indicators. So we have trend indicators, we have oscillator indicators, we have volume indicators, we have custom indicators. So basically for us, we are interested with what we call trend indicator. That's the moving average. So you click moving average. So the first one, we will use a combination of 3. So the first one, we'll use period 5, and that is simple close moving average, and then the color is yellow. Then you click OK, so it will appear on the screen. Then you come again at the same point, choose moving average. Now we'll go to period 20, and then it's simple close, and now we change the color. Maybe here you can change it to blue. Then you click OK. Then you come again, the last one, moving average. We do 100, period 100, simple close. Then here we choose a different color, let's say color red. Okay. Then you choose OK. So as you can see now in my screen, we have all those moving averages indicated in the screen. And now I want to show you how to interpret. So how to trade these moving averages? First of all, there are 2 ways. We have the cross of the moving averages. So when the moving averages cross, it's a change in trend or a change in direction. So here you can see this was an uptrend. So the 20 moving average and the 5 moving average crossed below the 100 moving average. And the moment it crossed, this cross shows change in direction. Okay, it shows change in direction. And for this one, now once this happens, you need to do, you need to be now start looking for your sell entries. Okay, then the moment, let's say you are in an uptrend, again at this point you are in an uptrend, and now when the market crossed, let's say you entered your trade here for a buy, and the market, you've been riding the market all the way up, and the moment you see this crossover of the moving average, it signifies to you that the trend is changing. Therefore, you want to take your profits at this point, or you want to exit your buy trades at this point and look for your sell entries. Another way of trading moving averages, it's by the bounce of the moving average. So you can see this was an uptrend. Okay, this was an uptrend. So the market, the 100 moving average acted like a support or like a trend line. So the moment that the price hits the 100 moving average, it bounces off. It comes again, it bounces off. So you want to be trading this bounce off. Okay, so this means you could have bought at this point, or you could have bought at this point and ride all the way market. So all these are buying points where the market is bouncing off from the moving average. And you see, you could have ridden all this, the trend all the way up to this point when the crossing over happens, which shows you now it's the time the trend is changing and you need to exit the trend. So you can see how powerful the moving averages are in terms of showing you the trend. And remember, we always say that the trend is your friend. You trend with the trend. You trade with the trend. Therefore, for this one, you could be doing your buys. Okay. So again, here we come. You can see now here the market was selling because it was this moving average. The 100 moving average was acting like resistance. So here there is a crossover. So once the crossover happens, you can see now the market is what? It's in an uptrend according to the moving average strategy. Now let's look at RSI. So when you want to add another moving average, you come at the indicator session here, you go to oscillator, that is where the RSI is, and we take the default settings, that is period 14. Okay, so once you do that, the RSI appears below here, so you can see the RSI. And as we said, the RSI as ranges from 0, you can see 0 here, up to 100, okay? But we said that between 0 to 30, this region of 0 to 30, the market, the RSI shows that the market is oversold. And therefore, if something is oversold, then you'll be looking to buy, okay? You'll be looking to buy. At the session or the area between 70 and 100, we said the RSI indicates instances of overbought. And when something is overbought, you'll be looking to do what? You'll be looking to sell, okay? Therefore, when now you're looking at the RSI, you take the vertical line, and let's say, for instance, at this point, okay, let's draw this point. So you can see this point. So at this point, when the RSI was at around this point below, slightly below that region mark, you can see the market also here. It was at its maximum or at its minimum, and therefore this indicates instances of oversold. Therefore, we look to buy. So you can see the market bought. You can see the market bought. Another example. Let's look at this point. You can see at this point where we have the RSI around 70. So at this point, you can see we say that between 70 to 100, the market is overbought. Therefore, we look to sell. So you can see at this point, the market was overbought and the market sold all the way down. So if you just backtest this, you'll be able to see how you can be able to apply this indicator. So at this point, again, you can see the market is what? It's oversold. Therefore, we look to buy. So if you combine other indicators, let's say if you combine other aspects that you have learned, like candlesticks patterns, therefore this can be a high probability entry for you at this point, because you can see the RSI says it's oversold. Therefore, you look to buy. The candlesticks patterns here, it's more of a bullish engulfing, and it's also forming at a point of support. You can see when we draw this line, this is the region of support. Therefore, you have like 3 reasons why you have taken this trade for a buy, and therefore you take it and you write it for a buy. Okay, so basically, with indicators, for me, I usually say that they are lagging span. They follow the price. But the reason why I don't use indicators to trade, it's because I'm more of a price action person. And with price action, you find that it gives you high probability entries. Indicators at times will be, not at times, but they are always lagging span. They follow the price. Therefore, you might catch the trend when it has already moved some instances. But when I'm using a technique, when I'm using pure price action, it becomes easier to identify the trend when it's beginning to form. Okay. Therefore, the only secret with indicators is for you to backtest and practice how to use them. And once you perfect the game, you're good to go. Okay. I'm not saying that indicators are bad. I have seen traders who use indicators and they make some good money in the market. Therefore, it's up to you as a beginner to find whatever works for you, and you need to go for that. Whatever works for you, perfect it and go for it. So thank you so much. In the next lesson, we shall look at the stochastic and the MACD. Therefore, ensure that you like, subscribe, so that you don't miss the next video. Thank you so much. See you in the next video.